welcome to Inside the Markets. Today's guest, Peter Spina, goldseek.com. Peter, I know we spoke here about a week ago. Off air, we talked about QE everything might mean different guidance for gold. So let's go ahead and pick up our conversation from last week and maybe drill down a little deeper. But has this latest move by the Fed impact your thoughts on gold?
Hey, Rob, well, it's really a historic moment. We're seeing something that will be looked back upon as a defining moment in the gold markets, something to understand and learn from. COVID-19, they say, is kind of a black swan event and is exposing a lot of different issues in the general system, all the debt that was leveraged and all these different markets that and companies and so on that have all this debt. So we got that problem surfaced up very quickly, which required this massive amount of printing, quantitative easing to infinity, to all these different handouts and so on. They're going on to historic levels, as far as that goes. But in the gold market, in the last few days, we've seen also what is something a lot of people have mentioned in the past. There are some problems, structural issues with the gold market, and it'll be exposed at a certain point. And maybe that's the black swan event too for the gold market now. We have seen, it's really the perfect storm. When you think about all the different conditions at play. First, we had this liquidity event. There was this mass sell-off. They came in with guns blazing, and there's just massive amount of printing that's tens of trillions of dollars. I mean, everything that'll be done to stop this will be done. So you have that issue, which is very positive for gold. 0% negative interest rates around the world. Great. Gold's got that going for it. Lots of interest going to come into the market. Next, you have these quarantine isolations that are happening around the world. So now you have mines that are being shut down. You have refineries. 4 of the Swiss refineries have been closed or instructed to close now for 1 week, which is the start. How many weeks are they going to be offline? When they get back online, can they source their supply? With the mines that are being closed for a month or more, are they going to be back online right away? And then you have worldwide infrastructure problems. You don't have planes that are able to take off, or normal cargo flights, and this connectivity and other borders that have come up. So you have all of a sudden a moment where things have kind of just broken down in different ways. And you have a supply chain issue now with new investment gold coming on the market. Obviously, there's other gold that could be sold and wants to be sold maybe in India or in the Far East, where they've been buying lots of gold and they have a dollar shortage and they have a liquidity crunch still going on. So they want to sell some gold and then bring it over to the hungry markets now, which have emerged in the West. So the Western buyers have suddenly started buying gold in a big way. Now here in Europe, with the Swiss refineries now offline, that just adds to the overall growing buildup of delays that we've been seeing over the past several weeks. In general, there's strong demand, and now there's this situation where the markets have broken down. Everything is just, there's people don't know where to find refuge, and they are getting scared, and they see now that there might be a very tight supply in the market coming up. So they're reacting very quickly right now, and there's a raid of the existing supplies in the market. That's what's happening. Vaults are being emptied. The bullion dealers are running out of stock. We first saw it with silver, and now it's happening very quickly with gold. And the ability to replenish those stocks are being impacted on many different levels. So, it is a perfect storm. And so this translates now into what is the gold price? What is the price of gold? Well, today on GoldSeek, we saw it go to about 1,600, over 1,600. The gold price in the futures market went from under 1,600 to 1,698, then pulled back to 1,630. Kitco was going from 1,500 to 1,700 ranges around there. All of a sudden, the pricing structures broke down because there is really no way to price the market. There are localized prices depending where you can get supplies. So I guess what the key is, the price of gold is where you are at. And that is going to continue for some time. I think now, if you have any supply of gold in your local market that isn't trading at a massive premium, buy it. I mean, especially if you're outside the United States, that's, I think, the big demand that we're seeing. We're seeing over here in Europe is, as an example, in my situation, I'm here in the Czech Republic. I have a country that's in the European Union, but they still have their own currency, regardless if it's a euro or not. You're seeing the U.S. dollar appreciate, and you're seeing the kind of relative weakness and stuff here, and you're starting to wonder, where's my country's position in all of this? There's a dollar shortage globally. There's a strong demand for dollars, so people are starting to sell off the local currency. So the Czech crown has lost, 21 to 26. Let me see. Are we at 20 to 30% drop in value versus the U.S. dollar recently? That's a huge drop. So now you're starting to kind of panic because you see the economy has kind of collapsed in this situation, and people have all these debts and needs for dollars. So the question for us now comes into play: what are the central banks going to do to prevent this rush into dollars? Because they hold the reserves of these foreign currencies in their balance. And in the Czech Republic's case, it's not a good situation. It's a situation I've tried to bring up many times with the media here, and they ignore it. The gold reserves of the Czech Republic is down to just under 8 tons. They've been selling it, just like Canada. Canada sold it all down to nothing. They have no gold reserves. They have nothing. The Bank of Canada has 0. So the Czechs have almost sold that off. They have a nice supply of U.S. dollar reserves and some euros until there's a real rush out of the currency, a panic, and that can evaporate very quickly. So capital controls are very, very possible in the near future. And your alternative at that point, if you can't get dollars, is, hey, do you want to get euros? I don't know if you can even get those. If you can even flee your domestic currency, well, obviously gold is an excellent choice, and people finally quickly rediscover it. And yeah, the limited supply is available. People just buy what's left. And I think people really need to consider, and in Canada, today they're voting on these dictatorial powers for their finance minister, someone who will have supreme power, no need from the parliament to make massive decisions for them, which includes raising taxes, cutting taxes. And I'm very sure they're also thinking about capital controls, because the Canadian dollar also has some big issues. So if there's going to be a rush out of the local currencies for dollars for other things and trying to swap out of the domestic currencies, the government, the central bank, they're going to put restrictions on it, and you're not going to be able to get out of your domestic currency. So right now, the way I see it, gold is your best option as a hedge against the U.S. dollar, but the U.S. dollar is benefiting from this unique dollar shortage that's occurring also. So that's what's happening, and I think people are waking up to it. And now we get to the gold market again, kind of going back to the original part, which is what we're seeing in the gold market. Well, the gold price in the COMEX has gone up about $200 since yesterday. And I had written about it, in the prior days, that we're getting to the point where we're going to see the gold price make $100 to $200 a day moves. It's going to get repriced very quickly. Well, in the situation that we're seeing now, that's what's happening. Yeah, people are getting into that market, and people are trying to buy up the last supplies. But then this question comes up, which is there a general raid on all the existing physical gold inventories? Is someone to come in right now to the COMEX gold market and try to take delivery of the inventory that's eligible? Because there's registered and eligible categories. So there's I don't know what the latest breakdown is, but you can quickly take that out. I think for silver there's like an 80, 90, 100 million ounces that you could take out. JP Morgan has 300 million ounces of silver. So these inventories could get raided. Same thing could happen even with GLD. They could come in there and start trying to, I think if you have a certain amount, you can take that. So if there is some sort of schemes like in the GLD, if they don't have all the physical gold there, if they can't deliver on their promises, next thing you realize is that in the case of, say, gold futures contract, that's a gold IOU note. You are promised something, but are you going to get it? And that could really expose a lot of these other questions. And some of these paper products like the GLD could be exposed. They could collapse. That could be a disaster. Get the hell out of that if you own that. Why do you hold that? If you want to use it as a proxy for a day trade, maybe, but I wouldn't trust it. There's no need to trust that. There's I think Sprott Physical, at least that's if you want to have a paper proxy or something, that's at least do that, but try to hold it in physical if you can, and see what happens, because the price is broken down. There's no way to really figure out what the gold price is unless you look at the local markets for the next coming weeks or months until this starts to normalize.
So yeah, no, I appreciate that that insight there. And I was gonna say, I mean, this must be a surreal moment to give speeches your whole career on the reasons to own gold and watch them come true right in front of your face. And I think you hit the nail on the head. Is if there's a run on gold, what is the real price of that? And then do we start talking about government confiscation because the system's broke, like you said? They can't deliver. How's that look?
Well, first of all, the price of the gold is going to be determined a lot by a lot of your gold bugs out there, the ones that have been hoarding it. Yeah, let's see what they want to sell it for. I'm sure they're not really eager to go sell it right now. Good for them. Don't sell cheaply. Confiscation, that's a problem. Yeah. That's a part of capital controls. How do you deal with that? If I was in Canada, I would try to, maybe buy some gold in a different jurisdiction, have it vaulted in Switzerland, places that you could trust more. But I've gone through this with someone who was an expert on this subject many years ago, and you have to have the right structure to do it. And I don't know if these companies like Gold Money, Bullion Vault, all these guys, they have a great product. I have money with them. I diversify my holdings in different ways. But if there is a gold confiscation order and it threatens their citizens with a severe penalty or jail, like they did in 1933 when they confiscated U.S. Americans' gold overnight, when they revalued the dollar in an overnight move, what do? Everything's electronic. They know you have it. They're going to force you to repatriate it. And they're going to buy it from you probably at that case at a really discounted level like they did in 1933 with the domestic currency. They'll cheat you out of your gold that way. It's very possible. So I guess if you want to become a criminal, you buy your gold and hide it and don't report it. But I mean, we're all criminals now for trying to protect ourselves and do the honest thing. This system, unfortunately, is kind of stacked against those who think differently and have good values, which doesn't include supporting an immoral monetary system.
Yeah, and speaking of, I think if nothing else, this coronavirus has really accelerated the move to the cashless society. Talk about how that's going to end up, and I mean, are we just is there too many millennials out there, and everyone's trained to just? I mean, I don't see cash used at all. I try to use cash. I always keep change. Got to keep it in circulation, but I got to believe I'm in the minority.
I quickly learned here that cash is trash because they don't want to touch it once this corona hit, and I always keep an emergency supply because I don't trust the banks, but I keep money in those banks. But this morning when I woke up, the first thing I did was decide to put all my short-term liquidity above a certain percent, not all of it, a big part of it, into physical, because I don't trust the banks. I don't trust the bail-ins. I don't trust the currency. I don't trust gold is about trust, right? So, digital currency, we've been trained, the millennials have been trained. They're going to accept it. They're going to force us to have it. Cash is going to be forced potentially now to be turned in. So they will force all the black legal underground money or those that have taken it out of the bank legally, like myself, and didn't want to put in the bank, then you're gonna have to force to put into some sort of system that where everything is digitized and everything is tracked and everyone's economic connections and activity is traced and reported and data based. What the hell is that? What kind of world is that? Is that America? Is that a free society? Are we free anymore? That to me, I mean, we have that in some levels with credit cards, whatever, but we still, cash is still on some level anonymous. But that on that level, that question of liberty and that question of freedom, that's a very scary thing. And I think you probably know more on how that's developing, because I followed it a while ago with the crypto, and I just it's a scary route to go down to see what they're going to try to pull off there. But I don't know.
Yeah, no, it's it's certainly a deep topic, probably too deep to go here. But so let's talk about how investors are going to maneuver around this. Obviously, you've laid out a fantastic case. The only case to me is to ever take delivery of this stuff if you really want it. And I would say probably keep it with you. I think that would be that'd be my advice. But as you say, we might be criminalized for doing so. But let's talk about these equities a little bit here. Just been trashed, and for those who can't go out and get the physical, and whether they just don't know how, aren't comfortable, or just isn't available to them, a great way to make some money, I think, short term will be in these equities, but keep them near and dear, and keep your eye on them, and because they are roller coasters.
This is actually, the I don't know, the irony of an IBR or everything that's going on. We'll look back at this and maybe not realize how amazing and funny it is. But at this moment, in the short term, the miners have an issue. They have a problem. They have to cut production. They have to cease production. They're a cash flow dependent industry. So again, you have to look at the cash balances and the balance sheets of these companies and see what an impact of 1 month, 2, 3 months might do. What would a low silver price for a sustained period do? Do you want to be all in just a silver company with a lot of debt, or do you want to be with one which has a lot of cash that can navigate through this difficult period if it does last longer, if they can't find the price discovery in the gold market or whatever? But these prices have been just savagely it's the valuations are just disgusting. Like I think we were looking at yesterday at Kirkland Lake, has tons of cash. Thankfully they stopped whatever this is, stock buyback crap, and they don't do that. Conserve your cash. Cash is king. Get through this difficult currency period with dollars. Have some currency like that. They should be holding physical too. I don't know why they don't do enough of that. But these companies that can get through this are going to do extremely well when they get back online, because now effectively their own mine shutting down and having huge parts of the silver supply market offline, having huge parts of new gold supply feeding a hungry market offline. It's creating this perfect storm, almost like a once in a lifetime kind of a scenario that you'll see this happen, where this super price squeeze in gold is underway, where we might see I yesterday morning when it was 1550, I said we're going to see 1700 within 1 to 2 days. Well, I was wrong. It was 0 to 24 hours. Gold is going to have these $100 to $200 up days, and it's going to sustain itself. It's not going to come back. So when the miners get back online, they're going to be sitting in a fantastic position. Now, I guess we got a question. Maybe do the current futures market, I mean, how are they going to transact gold in the future if there's some issues with physical? Maybe they're going to have a competition. They should have a competition for physical supply. So you might have some really interesting new offers for gold miners to sell gold, and you might get better price discovery. They're going to be sitting like kings right now. The business model for miners has been horrible. It's usually a horrible investment. I invested in it for over 25 years, and for majority of the time it's been a horrible experience, and periods of it is hugely and highly rewarding. But in this moment, I don't think it matches any other situation that I've ever seen. I don't think it's matched any other real situation in history where they're going to be sitting on these record gold prices. And they're going to just have massive amount of profits. So that's going to be, it's going to shock the prices that have collapsed 50, 70. I don't know. There's been some stocks that are just collapsed 60, 70, 80%. It's ridiculous. They're going to go up just to go back up where they were a few weeks ago. If you go down 60, 70%, you're going to more than double your money on a half. So, or more. So, take advantage, buy some positions here if you're worried about further declines in the equity markets or whatever. Diversify it. Don't buy the ETFs. Do not buy GDXJ. That also was breaking down. GDXJ had negative cash. They had huge, wild 30-40% swings, getting 10, 20% or 25% under their net asset value with all these leveraged products. Stay away from that stuff. That's dangerous. That's toxic. These ETFs are horrible, toxic, also high risk things. You got to buy the companies directly. You got to do your research right now. You got to look at the companies' balance sheets very closely right now. That might not be a problem soon because money might be thrown at them if this is going to really take off here in the next week or two. So we'll see. But I went full back in. Last week I went to more. I had this cash. I was sitting around, and I started buying some general equities, which I have not bought. It's a very unusual thing for me, but it kind of got oversold, and I needed some sort of hedge and I play to kind of make back some of the recent losses. So I played that. I hit some real high sell-offs like in United Airlines and Shopify, and I played those bounces, and I went full back in today, sold all that, even though they might bounce a lot more, but I'm back into the miners. There's so many great opportunities. Create a basket of miners and make your own ETF, and I think, you're looking at some, I don't know what how many multiples higher this can go from here, but it might be one for the history books. So
Yeah, and following up on that, I asked a buddy of mine yesterday as a fund manager and in the States, and they have little to no exposure here. And I asked them if there was a point of gold where they just make a blanket bet and just start throwing money at whoever gets the loudest and really gets their marketing game on and stands out from the crowd. What number is that in gold, do you think, to get the U.S. Investors involved?
2000 maybe gold price. Here's a real quick other thing that I was thinking about. I wrote this comment this morning or yesterday to Market Watch or Wall Street Journal. The gold miners are going to become the next proxy for the gold price. If you want to get gold for under the gold price, the gold miners suddenly have ounces in the ground and things that they're mining that are so cheap, their valuations and everything, they're going to start shining very quickly. So I don't know. I think it's happening right now. That's why this morning, even though I think there's a bounce in the equity markets underway, and there's really, there's going to be some general equities that double or triple. But for me, the miners are in a perfect position. They're going to be the proxies to getting gold right now. If people can't get physical gold, the next best thing is to buy a gold miner. What else are you going to do? I don't know. To me, it seems very logical that gold miners are also in the perfect storm here. So I went full back in, and I think we're going to see some of these big names do extremely well very, very quickly, very soon.
What if you were laying out some advice here within the sector? You think the explorers get the biggest bounce, or will it just be across the board?
Higher, they're going to have the highest risk. In some ways, the exploration plays kind of funny in a way, have less risk because they're not mining, so they don't have a cash flow, near-term cash flow demands and risk from a mine that has to shut down and has a lot more overhead and other things to deal with. So exploration companies that might not even be planning to do a drill campaign up in the Yukon until May or June with a lot of money they just raised, this kind of puts them in this period where they're not as at much risk. So yeah, it's kind of funny. You could argue that. I have a bunch of exploration and juniors, but for my main liquid and trading portfolio, I went higher up into the larger miners as they start to really heavily bounce, and I see their kind of risk reward diminishing. I start switching that more into the juniors. That's kind of what I'm gonna look at right now. But for me, I don't want to take as much risk in this kind of illiquid market. So when I buy a junior and exploration company, I always take the approach I'm buying that thing for a year or longer anyway. So I don't try to lock myself into a short-term trade in an exploration stock. But there are some there are some companies that have really gone down. So yeah, it's there's so many things to look at and buy. It's kind of hard to know which one to pick first. But I think the best is to have a diverse portfolio of different companies. Hedge it.
Yeah, and their currency hasn't helped them anyway. North of the
Oh,
border,
it's
just
horrible.
getting
Oh,
smashed against the U.S. dollar. You see that reversing anytime soon, or is this just going to the dollar? The dollar is just going to be the best house, bad neighborhood,
you know,
all liquidity.
yeah. I mean, here's a perfect. This is going to be, I think, the unusual part here is gold is going to rise with the U.S. dollar. There's going to be tandem. Um, Gold is returning as a global currency. It is money. It always has been, but in a global currency sense, it's going to come back. I think there's going to be a breakdown of trust among trading partners, and naturally, gold becomes a unit of trust, a way to exchange and deal with. And there might be something coming up with the U.S. dollar, but for now, the dollar shortage. I think the U.S. dollar is going to soar against certain currencies like the Canadian dollar, the Czech crown here. That who knows, 25, 50%, still more. I don't know. This COVID thing brings up a lot of issues that were sizzling below the surface on so many levels, whether it's the obesity issue in the United States, which has the highest amount, which is going to create a huge strain out on the medical system, or whether it's the debt problems and the general the systematic debt everywhere, to places like in Canada where they don't have any gold reserves. They don't have anything. The Bank of Canada has a maple syrup reserve. They don't have any gold. They have been taxing their citizens more and more. Carbon credits. They've been screwing around, pretending they have all this money to waste. We have a bunch of politicians have no business or real life experience, and they don't know how to manage this thing. I think the leadership in Canada is that he's at risk. But I think things have been so screwed up, and you saw, 500,000 people unemployed last week, where they're going to be printing so many Canadian dollars. But watch what happens today. Watch what happens next weeks or months throughout the year. This is going to put a lot of these problems up. It's going to bring it up. And the Bank of Canada and the reserves, what are they going to do? How do they buy the gold now if they don't have a lot of dollars? Are they going to start stealing it from their miners? Are they going to force them to sell gold in the domestic currency at a discounted rate? Are they going to turn into an Argentina? An oil price of $20 and low commodity prices, that's really bad. Thankfully, they're right next to the United States, and we have a lot, still being the number one economy in the world. But boy, I don't know. Eventually, the U.S. dollar has to get weakened. Being strong is not good for the U.S. as well. So there's going to be a rallying U.S. dollar. And I keep thinking through what could they do what could they do to devalue the dollar overnight? Obviously, we saw that in 1933 when the executive order was issued, which Trump now with his powers can do this, devalue the price of the dollar versus gold. And maybe with what in that sense they can offer gold on the they can offer more dollars on the international market in exchange for gold at a certain price. And that scheme in a high dollar environment, the US plays it plays out looking pretty good for them. The United States could end up building a massive gold reserve very quickly in this dollar shortage. Wow, I don't know. I'm thinking through it. I'm trying to understand and think through what the potential possibilities here are. But it surely seems that gold is in a pretty good setup, and with the way they're printing money, gold is the money of trust, and it's the safe haven, and people are going to rediscover it on Wall Street very quickly in a really big way, and I think that's already underway. So
yeah, I haven't seen any. Well, I guess we've had some cash controls here. I don't think you can take any more than 1,000 out of the bank, but I haven't seen any ATMs lock up yet. But how is it over there across the way? Is there a limit on what you can take out per day? It's pretty minimal.
not yet. No, not yet. I think for them, they need the economy is totally crashed, right? Economic collapse. There is the velocity of money. The people are, they're buying, food essential things, which they have to put limits on how many items you can, buy of certain items, but they're not restricting the amount of cash. They're pumping hundreds of billions of crowns into the systems and these new bailouts and other things to keep people to spend because they're not able to work or they've lost their jobs or whatever. So right now their objective is to fight the deflationary forces at play. And that's what quantitative easing, fiscal spending, all these crazy programs, I can't even keep up with it anymore with the Fed. It's the corporate market, it's the bond market, it's every market, it's handouts, it's no taxes, it's paying rural, I don't know, it's endless trillions and trillions. So it's everywhere. They're trying to put the liquidity in the system. But I think they'll limit cash handouts once the hyperinflationary forces of all the liquidity might hit. So that I think that still comes down the road. I think more is on the capital control front on the national state level, where you're seeing the capital trying to convert from the Czech crown into the US dollar or whatever. They're going to try to prevent that from occurring. And they can create a dual currency system, have the domestic dollar and the international dollar or whatever, domestic, I think, renminbi and the yuan, so there's different ways that they'll do things essentially to tax you or take percentage of your purchasing power, which you thought you had, away. So they'll confiscate some money or value that way, capital controls. So I think, yeah, they're going to be worried about their reserves, their dollar reserves, especially. Obviously, there's a huge attempt to do these dollar swap lines. Several banks have had an active dollar swap line with the Federal Reserve for many years. So that got expanded to a dozen, I don't know, with 15, 20. There's a lot more central banks participating in it. And this dollar shortage is going to create all sorts of other problems. But it's kind of ironic that the dollar is going to rally here with gold, and that's going to kind of mess with people at first. So don't lose focus that the gold price is a global price. So for most of the rest of the world, they're looking at the gold price at record levels, and it's surging very quickly now as the dollar rises with the gold price.
Well, I think it's a good place to leave it. You've certainly laid out the path for gold again, and certainly higher. And I've listened to more than several Rob McEwen chats where he's predicted $5,000 gold. I think I probably always believed it to a degree, but I think you laid out a pretty good case of how we might get there. Not necessarily tomorrow, but with this shortage.
But next week. Next week, this can happen so fast. The gold price can be $2,000 by Friday. It can be $2,000 to $3,000 next week. It might be that tomorrow in this market. I don't know. I gotta go pick up some gold, man. Thank you, Rob. Stay, take care, and everyone. It's a very unique time and period in history, but it's good to take some action right now and don't wait. I don't think this is a time to be waiting for everyone else to take action, because when they do, you see how supplies get raided very quickly and disappear. So thank you for having me on, and I look forward to catching up soon.
Okay, that was Peter Spina. You can find him at goldseek.com, silverseek.com, and certainly appreciate that insight and look forward to having Peter back up soon, especially during these exciting financial times.